Folks, we need to have an honest and heartfelt conversation around interest rates. I know a lot of you are out there just thinking they're going to fall and fall, and we're going right back to 5, 4, 3. Some of you think we're going back to 2. I don't get it. Yes, rates have fallen. Yes, spreads have come in a little bit. But to sit here and think that rates are going to fall another 100 basis points overnight is probably unrealistic. And that is even if the Fed cuts rates in March or May or June. Dustin, we got to talk, man. There's a lot of people that are, I believe, over optimistic. Is that the right theme here about interest rates? What's going on?
Yeah, I think over optimistic is a perfect way to put it, because a lot of the people, clients, even counterparts in the industry that I've spoken with over the last 2 months, or basically month, I would say month and a half, when we saw the lowest rates in December, are saying, the 4 to 6 rate cuts, the market believes it. We'll see rates down in the, fives, maybe even high fours by the end of 2024. So that ship, I was not willing to jump on even in December. I think there's a video you and I filmed
Yeah, we did.
about a month and a half ago, and we both were like, look, I wouldn't be surprised if there's only 2 or 3. I know market's penciling 4 or 6, but I think we're heading that way again right now, 2 or 3.
Yeah. Again, I think I've been studying the consumer for 30 years. It's they're rather easy to predict in mass, right? If you were going to look at a finite decision, it's tough, but in mass, and what do I mean by that? Well, rates were coming in, right? From November, call it 15th to the end of December, rates came down from 8.03 to 6.6, something like that. And what consumers do is they see that trend and they just extend it. Like, oh my God, it came down 130 basis
Yeah.
points. It's going to come down another 130 basis points. Folks, that's not how it works. I would tell you the market is a forward indicator. It has already absorbed a lot. I actually would tell you here on January 25th, the chances of rates being 6% or above all year, in my opinion, are better than us having something sub 6. But consumers are like, no, dude, we're going to the 5s. We're going to be there in a minute. It's wild.
No, and we've seen, like, I think obviously what set it off, and I mean, it's a tale as old as time. Like, the mortgage rates will follow the sentiment that the Feds put out there. Where we had the crossing of it was what the market wants to believe and how much they want to believe in their back pocket and sticking to their guns versus how much they want to believe what the Feds are going to do. And that has obviously flipped on its back in the last couple of weeks, because now this glorified, hopeful March rate cut that was supposed to happen with 90% certainty a month ago is now gone. The 4 to 6 times is now gone. So we've seen, in the last 2 weeks, rates have actually gone up about a quarter point.
Exactly.
And that should tell everybody that, look, your belief a month ago that we're going to have a gravy 2024 of rates just falling is not the case anymore.
Well, I don't know if you saw it this morning. I know you've got a family of little ones that are sick, so you may have missed it. But GDP came in for GDP came in at 3.2%, well above expectations. Inflation, PCE came in a little bit. We will get the actual PCE report for the
Jobless
month
claims
tomorrow.
too, I saw, right? We're a little,
a little higher. So, yeah, folks. I think I saw the peak was like 87% chance of March rate cut. It's now under 50, and it's got to be approaching 0. I don't know how you have rate cuts when GDP is 3.2%. That doesn't compute in my simple brain.
Yeah. And this is something that it may sound weird because I'm in the industry and typically lower rates are good for mortgage lenders, brokers, but I do like this pace better. I don't want to see rates come down this quick like a lot of our consumers or clients are hoping for, because it's honestly going to make things worse, in my opinion. From seeing the bigger picture, it's going to make things worse. So I like this path, as crazy as that sounds.
No, I think that's very valuable, and I would agree with you. What I would hope for is rates be in the 6s all year. Right? What that means is we could start to build that foundation and we can get back to a better place. If we just keep this almost, I don't know what this is called, just up and down chart, it's not good. We're going to piss off a lot of people. The have and have nots are going to be wider apart. It's not good long term. Yeah, you may have a good quarter or two, but long term, not good. Not good long term.
No, it'd be terrible. And I think you said it perfectly. Like having a good foundation after not having one for about 4 years is what
Yeah,
we need. Like
exactly.
that is
Yeah,
what
we
we
do.
need.
Yeah, we need to get back. So I saw this a lot in the commercial market, and see how this feels for residential, right? That's where you play predominantly.
Yeah.
In the commercial market, we had financial engineers, aka syndicators, come in and mess up the market. They overpaid, low cap rates, stupid
Yeah.
assumptions, raised a bunch of money. Now they're all getting smoked, or many of them are getting smoked. But if I step back and look at residential, we also had people doing dumb stuff with Airbnbs, right? They were overpaying, they were making bad assumptions. We had people doing, buying second homes, but calling them primaries. We had a bunch of stuff that we also have to clean up. So I think, a longer foundation allows us to clean out some of the bad actors, and
Yeah.
we can get back to just a better, more solid foundation. What do you think?
And that's so true because I see it firsthand. When I mean, I'm dealing with it's I'm not going to give an exact number because I don't know it, but the amount of clients that I've worked with in the last 3 to 6 months that had a short-term rental as the plan that now all of a sudden are coming to me because they need to get into some sort of long-term type of debt or figure out a way to 1031 it because they don't want that property. Or this is even a much bigger number. The amount of clients that John and I deal with, as well as Convoy as a whole, that are getting out of a proposed that they thought hard money flip that went wrong because now they can't sell it to
Mm.
get into long-term financing is I'm gonna guess 20 to 30% of the refis that we're doing.
Yeah, well, let me talk about that a little bit, because I know a lot of flippers out there, and there are some people that didn't listen to me, right? I kept warning people. You probably heard me say this: stop flipping luxury properties,
Oh
right?
yeah.
Anything up 2x the median, you put a gun to your head, and it's Russian roulette. And now there's, I don't know, 2 out of 6 chambers are full. Maybe you survive, maybe you don't. But
Yep.
the people that got hard money loans to do those, and then now they're looking for plan B, which is like, oh my God, I got to hold this thing. A, they're going to have a bunch of cash locked up. B, they're probably not paying back their private money or whatever full. And they're probably negative, which is, I call an alligator. I mean, they're just trying
Yep.
to stop the bleeding, right?
Yeah, and this is another thing I that just came to my mind because we see so many different clients, but every client has a different hard money lender that they work with. If you're getting in, and this is just off topic a little bit, if you are doing a fix and flip, if you are doing a bridge, make sure you understand the extension clause, due on all of that, because a lot of the times you're going to get to the point where even if you think you can refi because you haven't been making a payment and your current hard money lender is like, don't worry about it. Like, we're going to like let you try and figure it out. You know what the new lender is going to say? Sorry, you haven't made your payment. You aren't refining. You go figure out how
Yeah.
to sell it. You go figure out like there's a
Yeah,
lot of problems
exactly.
with not understanding your current hard money like debtedness.
Yeah. Folks, at the end of the day, what I am hoping for is a market that is far more, frankly, slower, right? I want a market that just allows us to breathe. I I want a market where if you overpaid, you lose some money. Let's just be frank. I want the capitalist system to work. I hate it when we socialize losses.
Yeah.
And that just drives me insane. If you did a bad deal, you put money in a bad deal, you're supposed to lose. That's how the game works. If you took all the profit from 2020 and 2021 because you got freaking lucky and you kept gambling, you're supposed to lose. That's how the system works. I
Yep.
don't I don't want a market where we get a four handle on the 30 year that bails
Please
people
no.
out.
Please no.
That would be so bad.
Crazy as that sounds from me, please no.
Yeah, that would be not good. But what else is going on in mortgage? We obviously have a Fed meeting. I think it's next week.
Yep.
You have a call on that? Do you think they're going to pause? Do you think they'll hike or cut? What do you think?
Put me on the spot. I think they do pause. which, as people should know, or any of the viewers, listeners know, if they do decide to cut rates, don't expect mortgage rates to go down. We already had that penciled in as happening. If they pause, though, obviously, if they go up, it'll be a lot worse. I don't think that's
Oh,
on the
dude, if they go
table.
up a quarter, that'll shock the
Yeah,
market.
it'll
Whoa.
be a fun increase, but I'm kind of hoping they pause, and I think they pause. I might be wrong. I think it's a little less than 50, so maybe I'm taking the house odds. But what do you think?
I don't think there's any question they pause. There's no chance they raise, no chance they cut.
Yeah,
I mean, how could you cut with a 3 GDP, unemployment claims at 220 or whatever it was for the week, 222,
yeah,
inflation coming in? We get PCE reading tomorrow, which is coming in. We got PCE as a part of GDP, which when you do it on a quarter annualization was 2%, which is their target. So very, very cool. Well, Dustin, I know I'm gonna jump to Jonathan, who is now in the waiting room. But before we do, how can they find you? How can they reach out and see what you can do for them?
go to convoyhomeloans.com and mention you came from ORAT.
Thank you, buddy. Take care.